So what's happening in the gold market? I mean, there's a huge surge. Just maybe you can quantify the surge going on, and then I'm going to ask you to describe why this is happening now.
Right. Well, it's been a busy 18 months. What we're seeing is a huge amount of interest in gold, but not from the traditional kind of retail investor. They haven't really quite joined the market. They're beginning to now in the last few weeks.
Now, just to be clear here, retail investor means
just everyday people.
Joe and Josephine Soap,
basically, investors. And they tend to come to gold when they are worried about the world economy. They're looking for a hedge. They're looking for the safe haven that is gold. Ultimately, it's a kind of a move to quality. And what we're seeing, though, is central banks have actually stepped into the breach. They've actually started to gobble up all available stocks of gold, investment grade gold. And they're doing so. Are we
talking about all central banks or most central banks?
No, not all central banks, but a lot of central banks are doing this. A lot of kind of emerging market central banks, and in Asia in particular, also in the Middle East, the Arab states, the Chinese, the Russians. Basically, an awful lot of people, a lot of central banks are looking at gold as an alternative to the dollar. The dollar-based system has been called into question in the last few years, primarily because the dollar became politicized. After Russia invaded Ukraine, Russian central bank assets were seized, held back, and the Russian government was denied access. And this was a kind of a watershed moment.
This is a major shock.
Major shock. Yeah, I mean, this really hadn't happened before in any major way. Venezuela would argue that their gold reserves were also compromised, but Russia is a major economy, major player in the world, and their assets were just taken. And they're being held, and now they're being possibly activated in order to help one side of that conflict. So staying out of it politically as a monetary phenomena, it was a world first. So if you're a central banker and your job is to protect your domestic economy, to make sure your balance of payments are secure and stable, you need international currencies in order to typically import energy, and the dollar was typically the currency that you chose. And while you were sitting on those dollars, you put them into the treasury market, and that was what's called the kind of exorbitant.
Okay, can I just pause you there, because I know you're so fluent on it, right?
Yeah.
But just for those watching, that then means that most of world trade occurs through the US dollar.
Yeah.
It was driven by, initially, as I recall, from the early 70s, it was a deal done between Saudi Arabia and America. The Americans gave security cover, and the Saudis agreed that they would sell their oil only in dollar.
Yeah, the petrodollar.
The petrodollar, which only just broke down recently.
Yeah.
So that then gives the American economy a huge privilege over everybody else, because because all other countries have to have reserves of dollar. So therefore, to have the reserves of dollar, they put it into US government bonds, also called treasuries. And that then gives them an unlimited pool of borrowing,
basically
at the cheaper rates than everybody else.
It's free money,
which allows them to drive the economy.
Yeah.
And then to your point, you come to the Ukrainian war, the Ukraine-Russian war, and basically the gold reserves of Russia have been ransomed or being grabbed by the other side.
Not just reserves, but they're non-gold reserves as well. I mean, and I think most of their gold reserves were probably held in Russia. But their foreign currency reserves held in central banks would have been compromised. Yeah.
So that's that, and so then we're seeing then the emergence then of, I think, what you might refer to as de-dollarization.
Right.
The movement away from the dollar. So what's happening there?
And it was a phenomenon that was building anyway, but this has really kind of spurred it on. Because essentially there's a risk now for central banks around the world in holding dollars that wasn't there or perceived to be there before. So if the dollar is now being weaponized for political purposes, doesn't matter which side of that you're on, it means that there's a new risk that you have to take into account. So that means you have to diversify out of the dollar. And what do you diversify into? Well, you can look at other currencies that you trade in. You can look at currencies, you can look at commodities. And gold has been the natural recipient of that flow. So central bankers have added gold to their reserves at an incredible rate in the last 2 years that they wouldn't have before. In fact, many central banks in years prior actually, removed gold from their reserves. The British government being one notorious example, sold most of their reserves under the management of Gordon Brown.
Gordon Brown,
yeah, it was quite a famous moment.
It was called the Brown Bottom.
It was indeed called the Brown Bottom. Yeah. So the British government would have
he sold at the bottom of the gold price.
Perfectly timed. Yeah. And great for the people who bought that gold, so we should celebrate them as well. So it's basically central banks are looking at gold as what it has always been, ultimately money that asks no questions. It's no one else's liability, and that's why it's a perfect reserve asset for those institutions. That's been driving the gold price recently, and you can see that because gold would have traditionally tracked interest rates, the cost of money, and inflation is a big part of the real interest rates. And what happened basically about a year and a half ago is that it broke free of that relationship in quite a marked way, and it started to surge as interest rates were falling. Interest rate yields were falling. Gold prices started to rise, and now what's happening recently in the last few weeks is,
and that's the first time that's happened in
recent history. Yeah. It's a marked change.
Departure.
And now recently the gold price itself has moved. You're seeing that the retailers and retail investors are now looking at it because it's basically the top performing asset across the world in many respects, and it's an inanimate object. So it's making a mockery of traditional financial advisors who would typically shun gold because it's not technically an investment. It doesn't have a productive cash flow, and yet it's actually beating the pants off everything, and it's doing so. Typically, it's like the canary in the coal mine. When gold prices start to move, risk is starting to increase in a very meaningful way, and so central bankers buying gold means that what do they know that the rest of us don't?
And can we just stop there? And I think that's it's very well summarized, right? But what are the risks that the central bankers? What are the risks out there that's driving it? That's the concern, and getting to the emotional side of it.
Yeah.
What is it? What's the fear?
Well, I mean, you're moving from a post-World War II dollar hegemony, currency and system globalization, driven by the dollar and, used, I think it's in 70% of global transactions. That's now fallen to like 58% in the last, I think, 10 years or so. So there's a marked departure from where we were before. That means we're moving from a unipolar world into a multipolar world. No one knows what the makeup of that's going to be. Ergo, there is a degree of risk and volatility on the cards that they need to account for. So again, gold in your own central bank, in your own currency and jurisdiction is something that you can negotiate in the worst case scenarios.
And can I ask you then about the development, Stephen, of a lot of talk anyway, whatever, about whether it's going to come out or not, but there seems to be attempts to put together a multi-currency platform involving BRICS, and BRICS, of course, Brazil, Russia, India, China, and South Africa is now I think Saudi Arabia and Iran and one other, can't remember, Brazil are in there. Sorry, one other, come to me in a moment, are adding to it. And this is becoming quite significant, isn't it? I mean, this sort of ganging up are coming together.
Absolutely. I mean, I think it's a real case of the emperor's new clothes. Basically, these countries are now calling into question the United States kind of de facto global role and policeman.
If they're trying to develop an alternative currency or multi-currency to the dollar, do you think it's going to be gold-backed or commodity-backed?
Well, there's huge speculation. I mean, they're going to be meeting in October, and there's many commentators believe that they might announce a gold-backed currency. We don't know. It would make an awful lot of sense. I think if the total reserves of all of these member countries was deposited in multiple jurisdictions around the world where that currency was to trade, it would underpin it in a very kind of independent way, and it would remove that currency from political, threats, you might say, those same threats that are very much in the dollar or baked into the dollar now. Whereas if you don't play by their rules, they will punish you. What side of their policies are you on? And that arithmetic should not really take part in global trade. Global trade is about value. It's about value creation, about transactions, and payment should not be held up because of some political crises somewhere in the world, technically. So there's a huge reason why they'd want to do that. I mean, there's a reason why the euro has the euro, the British have the pound. They don't have the dollar as their currency. They want sovereignty over their money. And these countries, India in particular, is a huge growing economy. Going to be one of the biggest economies in the world shortly. It's on a tear. They need to have a currency that they're trading with those partners that they're trading that doesn't involve the dollar. And it makes absolute sense.
And then if you would just go back to 2019 for a second, which is pre-COVID, as I recall, the Bank for International Settlements, the central bank based in Geneva, aren't they all based in Geneva? The BIS they changed the rules on what was regarded as a tier 1 asset for bank reserves,
right.
Which is a general rule. Up until that point, it had just been US Treasuries. And then very quietly, gold appeared as an acceptable tier 1 asset. I remember remarking at the time, I thought that was very significant. And in a very short period of time, I'm not saying they're connected, but in a very short period of time, we were into the greatest inflationary surge we've seen since the 1970s, when the total loss of money value in Ireland across everything was about 20%, in excess of normal inflation over a very short period of time. And during that period, the ECB and the Fed, and echoed by the Irish Central Bank, were telling us all this inflation is transitory.
Yeah.
Had you ever read in any textbooks about transitory inflation? I couldn't find its source.
No. Yeah. I mean, like they were saying, listen, there's nothing to see here. Move along. We've got this under control. They had no idea what they were doing. They still don't. I mean, this is one of the greatest experiments with money we've ever seen. And they're all powerful.
Now, let's just get into that, right? So you see what I see, which is a level of indebtedness now in many countries that are at levels that we haven't seen since at the end of the Second World War and the First World War. So America is around 125% debt to GDP, and that's ignoring all of the internal liabilities to pensions and healthcare and all the rest of it. And Britain is very elevated. There's concerns being raised about France
and Spain.
And Spain, yeah. And Ireland has gone in the other direction. Our debt to GDP is now down to small levels again for the first time in a long time. But I mean, we're just a bit player in all of this.
Yeah.
So do you think that the gold price movement, which is, if you look at, say, the dollar has fallen against gold, if you look at it that way, by 25% in a matter of months.
Yeah.
So your biggest currency in the world is lost against the oldest currency of the world by a quarter in a very short period of time. Over 20 years, the total losses against gold by all paper currencies is tenfold.
Oh yeah, it's incredible, absolutely incredible. It's the biggest story that no one's writing about in the mainstream media. It's not so much gold prices are going up, but the currencies that we depend on are going down. And that's just an extraordinary indictment of the system that we have in such a short period of time. The amount of the boom bust cycle that we have. I mean, there's a reason why young people can't afford a house. It's not because this is across the globe, by the way. This is in many advanced economies. The inflation is baked in now. It's everywhere. And what you have is when you have inflation in commodity prices, such as gold and other materials, and you don't have that same inflation in wages, you have an impoverishment. And that's why you have like 30-somethings living at home, unable to get married, unable to have, start families. It's a real crisis, and right beside a demographic time bomb as well that's going off. We have, we don't even have a replacement rate in the West in many countries now for our populations. So it's an extraordinary set of circumstances, and you're seeing gold, the price of that manifesting in the price of gold. As risks increase, the gold price starts to move up and react to that. And if you ever look at a headline in the world and it sounds really scary and they're talking about it, look at the price of gold. If it's moving up, there's something there. If it's not and it's ignoring it, then there's probably nothing there. It's an incredible way of actually seeing the truth in any one news story that's happening.
So then when you look at the gold price currently, and people will say, well, it's too expensive now, it's too late to go in.
Yeah.
And I've heard that for 20 years. And okay, there was a big speculative period about 10 years ago, but just net that out for a second and just look at the underlying trend. It's tenfold increase in a 20-year period. But when you do look at that, and people say it's gone up too much now. How do you respond to that? In terms of that's an emotion, right? But when you look forward and you see what you see, which is more money printing, more deficit, greater deficits arising in for the next 5 years. Most Western countries' deficits are going to be even blowing out from where they are. And you see the geopolitical risks bubbling away in the Middle East, potentially coming into a regional war, and Russia, Ukraine still like First World War stuff that could suddenly kick off into something wider. Where do you see gold going?
Well, first off, I see currencies continue to depreciate. Most fiat currencies go to zero eventually. And the top dog today won't be the top dog tomorrow. So in that transition, you're going to find that people will look at alternative currencies, alternative assets in order to protect themselves. And ultimately what it comes down to is a concept called financial sovereignty. So if you've worked hard, you've earned your money, you've paid your taxes, you now have value that you can use for other purchases, your pension, whatever it might be. And then some no-name bureaucrat in some central bank decides to print money in order to prop up a political, policy by some official. And what that does is it essentially reduces your buying power. It's another form of taxation. They can't print gold. It cannot be printed. And so thereby when you own it and you have it stored safely in a safe jurisdiction, and it's outside the financial system, outside of banks, it's available for sale immediately, you have a form of safety that you won't find in any other asset class. Now, I always tell clients, okay, you need to put at least, between 5 and 10% of your assets at a minimum into gold. And I hope you actually lose money relative to your other assets. I hope it falls in value, because if it falls in value, the system is stabilizing. Politicians are being more honest. Bankers are being, truthful. And the future looks good for you and your kids and future generations. But if they're not telling the truth and they're not as honest as they say they are, and the system isn't as safe, then gold prices should start to rise as a result, and thereby take the sting out of a correction in your other more productive assets. So your property portfolio, your equities, your bonds, whatever else you have, your business, your education, these are all things that we enjoy as assets. And so gold is a way of hedging that risk. It's a kind of a qualifier for the other asset components that you have in your portfolio. And it sits very well with those. So, by all means, speculate in US stocks or British stocks, but have a bit of gold there as well. Because if something happens and they start to fall, the gold should start to rise.
Well, can I ask you then about the new boys on the pitch? New is in recent times. Let's just talk about digital currency, cryptocurrency first, as a private crypto. How do you see that? I mean, there's advocates out there almost like zealotly argue that this is going to be the replacement for the world currency system. And just are dismissive of gold. And see the world all about blockchain and keeping the code on your crypto. You made a comment earlier on that all fiat currencies eventually go to zero. Couldn't you say the same thing about cryptocurrency as a marketplace? No?
It's hard to say. I mean, some of the aspects are different. I do think, and I love technology. I've always followed technology, and I love the concept of cryptocurrencies, and I love the story behind Bitcoin. It's kind of a grassroots, came from nowhere, brought concepts that we hadn't seen before: distributed ledgers, immutable currency, limitations. But it is a response to the same factors that are driving the gold price. It's a grassroots reaction to that in an age of technology. And that's to be welcomed. It's wonderful. The problem with Bitcoin and many other cryptocurrencies are, and it's not that they're unregulated, but they're kind of in the wild, and they attract quite a few promoters and people who pump and then dump those assets. And some people, a lot of investors tend to be a little bit too lazy. They don't do their homework. They over-allocate. They get bought into the dream, into the marketing message, and they over-invest. So I do think there's a place for cryptocurrencies in the future. I think the technology is incredible, not only for monetary purposes, but also for the industry in general.
But do you think they'll become legal tender in time? You could pay your taxes in crypto?
it's really interesting. You're moving into the debate of central bank digital currencies.
That's where I'm going. Yeah.
And central bank digital currencies and they're looking at digital distributed ledger technologies to drive currencies. Money's been digital for a long time. Like 95% of all money is actually a digital concept. It's not even physically there in cash. But digital currencies are a superior form of digital money than what we currently have, which is, ledgers, managed by central banks and clearing agencies. But the problem and the risk that they introduce is the fact that they can be programmable. And if they're programmable, that means that you will own that money on conditions as determined by the state. And it won't be long before those conditions are then politicized and then used and weaponized, like the dollar has been weaponized recently. Power corrupts totally.
So a central bank digital currency then could become a system of enslavement. At its extreme.
Yes, absolutely. But on the other side, and in a kind of in a utopian situation, the idea of having programmable currencies is also has many benefits that you could also envisage. The problem is, do you trust the powers that be with the power over you and your money, saying, okay, Eddie, I've paid you your salary this month, but you must pay that. You must spend that in the next 6 months because, we have deflation in the marketplace and we've decided that we want to inflate prices and inflate activity. So it's for the better good. You need to spend that. And if you don't spend it, it's going to be gone.
But could it not
crazy.
Also extend into, you can't spend it on meat. You have to spend it on insects. I mean, I'm taking it to the extreme.
Yes.
But I mean, in other words, central bank digital currency is a system of enslavement.
Yeah.
Right. Because it'll go into the digital IDs along with your carbon limits and along with your vaccine passports.
Yeah.
And then it's game over for me.
Whatever the policy du jour, they can then manifest that and use the tool. Right now, the main tool they have is interest rates. They tend to be quite lagging and quite brutal because you can solve an inflation problem, but then create a housing market problem as well. And it's very difficult to kind of calm the market down. But you could find a situation where, and this is across the world. I mean, if this Rubicon is breached, and central bank digital currencies that are programmable become the norm, it may look okay for the first few years, but when that crisis, that always will happen, and the policy response will be informed by the new powers that they have. And then we have to ask ourselves, what have we done? Have we handed over so much sovereignty now that our day-to-day lives are being determined by someone who's unknown, unelected? You haven't necessarily elected.
Banal bureaucrats, I think is the word.
Technocrats and bureaucrats. Yeah, exactly.
But just then, if you then take gold, which we've been talking about as just a general asset class, can you just walk us through, because it's not quite like that. I mean, there's high quality products and there's very, very risky products. Can you just for the benefit of viewers, just walk them through that? What's the safest part of the gold market? What's the least safe part of the gold market?
Yeah. I think you have to be very, very careful who you deal with. And I'm not saying that because gold is unregulated, and it is unregulated. You should look at the reputation of the people you're dealing with. If it sounds too good to be true, it is. I don't think you should own gold. Most people shouldn't own gold as a speculative play. So when you're a speculator, the cost of owning it is actually really important. And what you give up is that physical, tangible nature, that physical property. Ultimately, gold's value comes from its tangible physical form, that it's not attached to anything else. It's not like a house that needs a renter to pay rent for it to maintain its value, or a stock that needs to have a P&L, a business. Gold just sits there, and it's actually really interesting because unlike any other asset in the world, it's what I call a contingent asset. Its value comes into its own when on a contingency basis, when the factors surrounding the market determine that this is a safe haven asset. This is a form of money that's accepted everywhere, a form of safety. So it's unlike any other asset class. And so when you're owning it, you want to own the physical, real thing. You want to own it in a way that's outside the financial system, in a jurisdiction that will protect your property rights.
So just bring that down from concepts to give me an example.
So you should own gold in a physical form that is properly produced by, let's say, what we call an LBMA certified refinery. So high quality and registered as such, product and format. It needs to be held in a vault that is distinct and separate from a
So
financial
gold
institution.
ounces or gold bars that are
Gold
basically
coins,
stamped.
bars, ounces, anything you want. It's investment grade gold held professionally in a vault that's outside the financial system. So if you hold it in a bank, and most banks don't even offer gold, their mortgage book, which might blow up someday or not, it won't compromise your ownership of that asset. You're not a creditor on.
So you want to separate your debt from your gold, basically.
Exactly. I mean, when you have money in the bank, you are a creditor of the bank. You don't actually have money in the bank. That money is now long gone. It's been lent out, speculated with, underpinning some loan that someone else has enjoyed. And so when you own gold, though,
you're an entitlement holder, I think.
You're an entitlement holder, exactly. So when you own gold, though, you actually have a physical asset that's sitting there. So it's not lent out to anyone else. It's there. And so it's important that you hold it in the right way, because.
And where is there for you then? Is that in Dublin? Is it in Zurich?
So we have 8 vaults around the world, and so typically, if you were to become a client of GoldCore, we would ask, what is it that you're concerned about? And you might say, I think the world's going to blow up next week. And we'd say, right, okay, well, you need to take delivery of your gold in your person and have it buried in your back garden. And there you go. And we'll ship it to you. Most people, though, don't know exactly what that risk looks like. It's something in the future, and they're just hedging themselves, like health insurance. You pay your health insurance premiums, hoping you never see that money again. You're just hedging, as you should. So gold sits in your portfolio. You have it sitting there. It's physical. It's in a jurisdiction. And then in the worst case scenario, you need to call upon that asset. You want to be doing so through an intermediary or a dealer like ourselves, GoldCore, who can liquidate that asset in the global gold markets for whatever cash you need and have it sent to you immediately, or ship your gold directly to you. And the way we store it is what's called segregated allocated. Now that's really, really important. What it means is allocated means it's in a particular format, like a particular type of gold, a gold coin, a gold bar, a gold coin issued by the Austrian Mint, or the British Mint, the Royal Mint, and it's certified. It's in a format that's recognized. You could take it anywhere in the world. They can look at it and tell you that's what it is, and you can sell it. So throughout time and people and different cultures. But if you have it in an allocated format, and then you have it segregated, which means it goes into a box or a receptacle, and it sits in a shelf in a safe vault, and it's not commingled with other people's gold. And that means that, if you were to go in there day one after you've bought it and scratch your initials into it, you go back 20 years later, that same coin has your initial scratched into it, hasn't been commingled. You're not beholden to GoldCore to tell you, oh, well, let us go through our spreadsheet and figure out which gold coin we're going to give you. There's none of that. We're just
pooled.
Exactly. And what that means is that we are holding your asset. This is called bailment. We're holding your asset in safekeeping, but it remains your property 100%. It's not on our balance sheet. We're just the custodian for that. And that means that you can then call upon that asset, liquidate it quickly in the markets, and then have that money in your account. We offer our biggest storage location is in Switzerland, because we really, really believe in their system, a system of government, their respect for asset and property rights. And also Singapore. We also offer storage in Dublin. And we also offer storage in the United States as well, and Germany. So what we tell people is, like, we don't know what the makeup of the world's going to be in 5 years' time. We don't know when the next Gaza or Lebanon or Ukraine is going to be. But what we are, and this is actually the biggest service we provide people, our number one role is vigilance. Is to sit on that wall with all of our clients feeding us information, and to look at the 360 threat level and determine where it is and what it looks like and what we need to tell our clients to do. And our clients are our biggest source of information. So they tell us what's going on in the world. We know why they're buying today and not tomorrow. And we can share that. And if you have a question, you can come to us and ask us, what does the Taiwan, China, US threat look like this month? We're going, it's not going to kick off, we don't think, soon. And what that means is that if we think, it is going to kick off, and how is that going to impact you? Well, you know what? Let's move your assets from Hong Kong and move it to Singapore, or let's move it to Switzerland. And so that vigilance allows you to determine where your assets are stored, but you're storing them across the platform in different markets, and you're hedging your bets. And in the best case scenario, you're never going to hedge yourself 100%. I mean, that's ridiculous to try and even think that you can do that. It'll keep you awake at night. But you do want to keep good company with a company, and we're established 21 years, and we have a 4.9 out of 5 rating with our clients, which is just extraordinary. And you can see that's all publicly online. And what we're doing, we allow you to spread those assets in a form that we think is safe, in jurisdictions that we think are safe, in a liquid market that we can then actually unlock and deliver to you whenever you need that asset.
And can I just turn the conversation for a few minutes to silver? There's a so-called ratio between silver and gold, and people are always talking about that. But silver, of course, is an industrial metal as well, so it behaves in a different way to gold. But in the event of a currency crisis, serious currency crisis, I'm not saying that's going to happen. I'm saying in the event of a major currency crisis, you can't just be going around the place with gold coins, because they'll be too big. They'll be worth squillions, right? Well, exaggerating, maybe worth too much money. You want to get something smaller. So silver does make having storage silver does make sense, doesn't it?
It does.
That an overstatement?
Silver has a different tax treatment to gold. It tends to attract VAT, so it makes it a little bit more expensive. But again, if you having silver in your hand is,
can you avoid just on the VAT point on gold? If I buy my silver but I don't bring it into Ireland, do I avoid the VAT?
Yes, you do.
Okay.
So if you have it stored safely, you don't take delivery of it. You don't pay VAT.
Okay. So
we sell lots of silver coins and bars, and we store those for clients on behalf of clients. And what you could do with your gold, by the way, and this is just again, I don't want people to buy on the basis of fear. In an environment where the currency system has been compromised, maybe it's a hack, it's not beyond the realms of possibility, and people are worried they can't tap and pay, which is quite scary. The amount of power in our mobile phones now. I mean, you take that down, you could ruin an economy overnight. So you could possibly, and I think every company, by the way, should have gold on their balance sheet. They should have, and we have a lot of companies coming to us and owning gold as an alternative to cash reserves that they would normally have. So you could go into your local shop and you could put an ounce of gold there, and it's worth $2,600 or 2,200 euros, and the customer, the shopkeeper takes that as a form of collateral almost, and issues you a loan that you could then use to buy goods and services. So rather than just paying directly for something, you could actually gain access to assets in the worst case scenario, and you're giving a form of money that he can then maybe use elsewhere. So the system is there, and I do think that an awful lot of modern economies, I think Sweden is one really interesting case where they were going full tilt digital. They said, wait a second, we actually need to keep a physical fiat currency system, a physical currency system, because what if they took down our system, or we are creating a single point of failure? And again, CBDCs could actually, maybe that's the big risk, could be a single point of failure.
This is central bank digital currency, just for those. And it is interesting that the Bank for International Settlements made it quite clear, the chief executive officer, Augustus Carstens, if I recall his name correctly, he was ex-governor of the Central Bank of Mexico. He made it quite clear that a central bank digital currency is going to be, it's not just about programmable, it's going to be surveillance. We'll know exactly who's spending what with whom. We're going to be able to follow every single payment everywhere at once. And it wasn't a question of we'd like to do this. It's a question, we will be doing this. I thought that was
crazy.
An interesting
It doesn't even serve them. I mean, it actually doesn't serve them. Even if you're like a crazy despot, people are independent by nature. I mean, we work in groups. You need to have whatever modern currencies evolve to, they need to respect the sovereignty of the individual to move across the economy as they so please, without being monitored, because that creates an actual economic model. You can go and do what you want and do it on your own terms, not because you're doing it to please somebody or
free market.
Because you're free market is what is the DNA of modern society. And so just because of a technology allows you that degree of control, the impact and the ramifications of that on society could be immense. I mean, I don't know how China is doing, but they've just announced one of the biggest, stimulus funds ever in history, and they really blew the top off. I think it's $1 trillion worth is going into the economy, and they hit all the markets. Like all their tools were initiated at the same time. Bank reserves were all dropped, interest rates were dropped. They're really trying to push it out. They're worried, But one of the things they have over there is a huge degree of control over their population. And I think that stymies creativity, it stymies freedom and innovation. And they are as a result of freedom. You need to have a degree of freedom for your population. And so if we go down that route, it's game over for everybody.
Well, it would be totalitarianism.
Totalitarianism.
That's what we'd be talking about. So in terms then, what would you say then, Stephen, to people that are listening to this discussion about gold, maybe for the first time, or they've heard a bit about gold before, but now they're beginning to think, maybe I should do something, I mean, this does sound pretty logical and credible. What would you say to them? How should they go about it? And what should they expect to happen in the reasonably near future with regards to their gold?
Yeah, well, I think you should look at gold as a form of financial insurance. And that's based on, you don't know exactly what the shape or form or the proximity of that risk is, but you do know that you'd rather have taken stock of the situation now and started a habit. So I think,
Well, isn't that an important point? Because I do recall that there was a run on the gold a few years ago, and the premium that you pay
increased.
Went through the roof, and then basically the physical movement of gold broke down. Well, that was the start of COVID, wasn't it? So they couldn't move. They couldn't move it at all.
It was interesting because the spot price of gold, which is the kind of the market price for an ounce of gold, as determined by the large bullion banks around the world, kind of went sideways and fell a little bit. But the premium on product went through the roof, and so you had a situation where the market kind of went different ways, and so the price that people were buying gold at was much higher than the spot market, and there was an awful lot of manipulation, or so it was believed, in the market to keep prices suppressed during that time of heightened anxieties, you might say. But now the gold price is completely decoupled now. It's moving on its own steam, which is really interesting. Where it goes, I don't know. But for the individual, I think 5 to 10% of your investable assets, that is everything but your home, you should definitely consider having gold in there. And you can also put in your pensions. Have a strategy call with someone at GoldCore. Give them a call. Go on the website goldcore.ie or goldcore.com. Have a strategy call. Nobody at our company has paid a commission to make a sale. We really believe in that. If it's not right for you, we're not going to be forcing gold upon you. That's why we have such a great rating with our clients. Have that gold in there, and then continue to invest elsewhere as you see fit. Some people have more than 10% because they're very worried about the system, and in difficult times you can increase that up. You can dial it up. We don't sell high premium products. We try to get the best value for our customers, and we also then believe in having gold stored. Take some home by all means, but then have it stored professionally. And so that's really where our credentials really come into their own, and that's why we've been around for so long, and have such a great
and you're also the European agents for the Perth Mint in Australia, which is a AAA rated government, the government of Australia. How did that happen? I mean, you were a young company 20 years ago, and you became master agent in Europe for one of the largest mints in the world. How did that happen? And what's your relationship now like with the Perth Mint, and where do you see them fitting into your products?
It's great. Back then, 2005, we became an agent, and it was an old classic Irish charm. We called them up and we charmed them and told them what we had all these great plans. They were beginning to look at foreign markets a bit more, and then suddenly these two Irish guys get on the phone and we made a pitch. We had like a very small balance sheet. I think we made €9 profit in that second year, and I was doing the accounts with our accountant. I was like €9, and we pitched it, and they looked at it and go, listen, you didn't fit the bill. You failed at every metric we had, but we just loved you guys. We thought you were really good. You really believed in what you were doing, and you're good people, and we wanted that passion. We thought it would help us, and so they took a chance on us, and so we worked really hard. It was our first big break. Since then, and by the way, back then, trust in governments was still very high. And so people thought, it's fantastic. Perth Mint, government guaranteed, no storage charges, what's not to like? And so we built that business, and then into the global financial crisis, it got very, very busy. A lot of people were moving into gold and silver with the Perth Mint. Since then, since the global financial crisis, the banks became tainted, obviously, but also governments and trust in governments began to wane. People saw the governments as being on the wrong side of that solution. And they bailed out the banks at our expense. And so I suppose people don't look at the Perth Mint or governments anywhere near as favorably as they did in the past. So most investors want physical gold. They're quite happy to pay a storage fee, a fair storage fee, have it stored in a safe jurisdiction, and have it accessible to them without the need of a government. In fact, a government is almost akin to a bank. And so they don't really distinguish between the two. And we still have lots of Perth Mint certificates, and we believe very much in the team there. It's a well-run organization, and they're growing. They're a champion in Western Australia, a great management team, and so we have faith in them. But if from our customer side, they wouldn't be quite as favored as they once were. Physical gold in a safe jurisdiction is the way people go. Yes, absolutely the ultimate.
The ultimate. Well, we'll leave it at that. Stephen Flood, thank you so much. Well, that's been a fascinating run through the gold market with Stephen Flood of GoldCore. You can deal with GoldCore directly. Just for matters of disclosure, I've been doing business with GoldCore for 20 years. As I said, clients went in at $250 an ounce. There's now 10 times that, and constantly telling people on television programs and publications throughout the years, buy gold, put gold in, because it's such an important asset to have in your balance sheet. That hasn't changed, and long after I'm gone, people like me will be saying the same thing into camera to try and get you to go out there and get some gold. You can deal with GoldCore, of course, directly in that regard. They're a very well run company. Stephen, congratulations on the service levels, and I look forward to having an ongoing conversation with GoldCore in the years ahead as we begin to look at what will happen in the future in the rearview mirror of the car, and actually compare and contrast what we thought would happen with what has actually happened. So Stephen Flood, thank you so much for coming in, and I'll see you in the next episode of Counterpoint. Please hit the subscribe button below. Thank you.